What is up? Welcome to Breakout Brief. This is going to be a new series I'm starting where we break down setups on stocks forming in real time. Today is May 19th, 2026, and the ticker on watch is going to be ARM, ticker symbol ARM. This one hit our scanner about a week ago as it was breaking into all-time highs, and it's finally starting to set up a play for us to enter. So ARM is in the semiconductor space, and it's a semiconductor and software design company that's essentially best known for building the underlying architecture and blueprint for a lot of the large companies in the space. So you have companies like Apple, Nvidia, Qualcomm, Samsung that all use ARM as a means to drive efficiencies in their processes. And more recently, ARM has gotten into the data center side of things, the AI space, as well as cloud computing, which has been a large growth vector for the company. We have the most recent earnings report here where they talk about the top line and bottom line beat, as well as how they're getting into these AGI CPUs for the data centers, which has drive efficiency for these large companies, and it has expanded and been a large growth vector for the company itself. So the trade itself we're looking at here, this is a textbook trade in my book, what we call blue sky breakout. It's a fairly recent IPO, and we actually traded the IPO base here originally, where this thing kind of based out and then broke through and then ran for about 100% within a couple months. But currently the trade is this blue sky breakout trade. So we have a stock that's pinged back and forth between this 100 to 180 level for about 2 years. It's slowly built out a long-term shareholder base. That's what you have here. And we're finally breaking into all-time highs. And you can see here on that original two earnings beats, from the past, you have this stock finally starting to move into the all-time highs. And why this is such an effective play in my book is because what you have essentially is you have all these long-term holders, people who have bought the stock. And when you have a stock that's at all-time highs and pushing all-time highs, anyone that's bought the stock is in a profit, right? So you don't have anyone, you no longer have the overhead supply like you have if you're buying down here, right? If you're buying at 109, you have all these people who have bought before you who are trying to wait until they get to break even and get out. So this stock is finally breaking the all-time highs, and we're flagging. We're starting to get that volatility contraction, which is exactly what we look for. Volume starting to contract, and we actually started a nibbler position on this one in the small account. So right now, what do we got? We have 10 shares basically, a couple $1,000. And essentially the way that I do my nibbler positions is I'll buy about 1/4 before the move, and then I'll add 3/4 of the move after. So for this one, 10. So our total position would be about 40 shares. And so what I'm looking for, we'll hammer down into a smaller time frame. I'm looking for this thing to tighten up here, and we're fine. You could have taken it long through that 217 pivot high, but really I want to see this thing tighten up over the next day or two up at this 228 level, and then we'll get that continuation move, and that's the real move that we're looking for. And you can manage your risk, and you should manage your risk from that level. Right now I'm running a stop at 197 for my entry position, which I think was about around somewhere in this 210 area. But you always have to manage your risk and play the probabilities. But as far as the stock goes, this is a high probability setup that we're watching for the next trading week.